Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, September 25, 2014. And you had a real down day, finally, in the market. Basically, well, let me draw in our Fibonacci retracements, and then we'll talk about where we are, where we're going. Okay, so here we go, right into the 50% retracement today. Okay, the low today on the spider was 196.27, and whether I don't know if I drew this into the number, but that's right into the 50% retracement. And if we open down tomorrow and have another down day, or at least a down morning, your downside target would be the 618 retracement. But I don't know if you're going to get there. I would say just because the market is really, really oversold, you're probably looking at 195 and a half. Right in the middle is probably a good target for tomorrow. But I mean, if you're already short and the market opens down, you take it off, or at least some of it off tomorrow, because you're probably going to get a bounce. And if you don't get a bounce and the market breaks, look out, because that means that there's no buyers out there. So if we don't get a bounce tomorrow, then the market is really stretched. And when the rubber band stretches so much, sometimes it doesn't snap back, it just breaks. And that's always a possibility in an oversold market. So that's kind of where we are. I would think one of two things is going to happen tomorrow. Either the market's going to open down and then attempt to rebound and float higher the rest of the day. And if that happens, I would look for an up Monday, since Monday's the last day of the month, I think, or no, Tuesday's the last day of the month. So if you open down and float up tomorrow, there's a possibility that they can try and rally the market a little bit into the end of the quarter to mark up some prices. And then if that happens, I would expect them to take it back down into, after September 30th, so Wednesday. That's one possibility. I've seen that happen time and time again. The other possibility is we break hard. And if we break hard, I still say that the 194.88, call it 194.75 to 195 area should be good support. If that doesn't hold and you close below this level, okay, not just pierce it, but close below this level, then we'll talk about next targets in the next video, because we don't need to talk about them now. But if you close below and anything, considerable, then it's game on, and there's a lot more downside to be had. Now, who knows what the media was saying today about the reasons behind the sell-off? You had Russia, about confiscation of something or other. Who knows? That's nonsense. What else did you have? You had some terrorism scares, and, well, that's not new news. We constantly have the threat of terrorism. So if they decide to pin it to a market sell-off without an actual attack, I don't buy the story. And, there was just, who knows? They didn't know why. And the reason is, okay, the real reason is, and you heard it here first, okay, because you heard it for days here, okay, is the fall equinox. The fall equinox was a turning point. Whether you want to believe that or not, or anybody wants to believe that or not, really doesn't matter. It happened. And I told you that I believed it was going to happen ahead of time. I've seen it happen time and time again. It's not a down move after the fall equinox, it's a market turn after the fall equinox. So if the market's going down, it would have turned up. It was going up, so it turned down. And that's a normal seasonality turn period. So, when you look at things like that, and I'm warning you days in advance that this is coming, and then everybody looks surprised when a sell-off comes. I mean, the spider was at 202, okay, around the fall equinox. Now we're at 190, below 197, okay? That's 5 points in 1, 2, 3, 4, 5, 6 trading days, okay? And everybody looks surprised. Go figure. All right, so that's where we stand. You should have a pretty good short-term roadmap, and we'll go from there. We'll take it one day at a time, and we'll just keep giving you the stuff. Before we move off of the stock market, let's take a look at the IWM real quick, because it's very important that we understand that I'm sure that I told you at least a dozen times that this was going to be great support on the IWM around 110. Okay, where did we go today? What's the low? The low was 109.75. Okay, doesn't get much better than that. So if that low doesn't hold, let's move over to a larger time frame, the weekly chart. Okay, if this low doesn't hold, which this was a good low here, okay, then it's 108, 107 and a half. All right, if that low doesn't hold, look out. And we'll talk about numbers when we get there, if we get there. But for now, this is good. Now, I'm just kind of noticing this, and I didn't really notice this until just now. But let me draw something in for you and see if it makes any sense for those of you that are in the know or want to know. So what does this look like? That looks to me like a head and shoulders pattern. I don't know. I don't need that one. Hold on. This looks like a head and shoulders pattern. Now, here's your shoulder, here's your head, and here's the shoulder, and this looks like it broke today. But let's see. I don't know if this is higher than this high here. The high here was 120.58. The high here was 120.97. Sure was. Wow. That's interesting, because if this breaks and plays out, and it doesn't play out in 1 or 2 days, but if this plays out, okay, you have, I'm going to get you a number. Bear with me. Well, as it turns out, it's $100, give or take. That's rough math. That's without a calculator. That's just doing it, looking at the chart and giving you a rough estimate. We don't need to know that number right now, but if this played out to the downside, okay, and we did one of these deals here, we kind of did a boom, another one, and then a trek lower. This is too, I made that too long, but it would be, maybe a zigzag pattern lower. This is $100. So there's your IWM. So we'll watch that. We'll watch the IWM for the head and shoulders pattern. One more down day in the IWM, and this will, confirm to the downside. But keep in mind that if we close above this line tomorrow, and this is a weekly chart, so if we close above this line tomorrow, and this line would be right at about, call it 111.50. Okay, so if we were up over $1 tomorrow in the IWM, then this would be off the table. So that's just something to watch. We'll talk about it again tomorrow night and see what happened. So that's an interesting one. We kind of found that one together. All right. Sorry that took a lot of time, but it was important. All right, let's go over to the gold market. Gold's interesting because we were down pretty large overnight. Large considering, where we are. For an overnight move. Here, I'm going to show you the actual futures contract. So this is gold on a weekly. We don't want that. I want to show you on a 60-minute chart, an hourly chart, what happened last night. Okay, so this is yesterday. We moved down. Okay, and then this is in the evening, and all of a sudden, 3 o'clock in the morning, we hit a low at 1206.49, and then it went sideways for a while, and then we started back up. In the morning session, when the market opened, we started back higher, okay, and we made somewhat of a bullish consolidation pattern here, okay, in the afternoon, and we'll see what happens if that plays out. Maybe we go a little higher, but I'll show you what I'm looking for, okay, in gold. Now, I think gold is weak. Obviously, it's weak, all right, but I don't think we're going to see much higher prices in gold. I'm not a gold bug here. I'm actually bearish gold, and I know that hurts some people's feelings, but I'm just reading the numbers. And let me go look at the daily chart with you. So let's take a Fibonacci retracement from the high to the low most recently. Okay, so we're here, and we go down to the low last night. Okay. That low last night. Now, if we get a retracement from that low last night to the 382, that's basically 1260. Now, I don't know that we get there, but guess what level is at 1240? The 25% retracement, okay, which is another level. 25 and 75s count. All right, I can, in fact, you know what? It's worth spending the extra minute. Let me just draw in. I don't know why this chart never holds this level. I always try and save it, and it doesn't save. Anyway, that's my lack of technology know-how. All right, so 1241.70 is the 25% retracement. Okay, so if we bounced up for another couple days and came into here, which kind of coincides with the 20-period moving average, I think that's a good level that I would look for it to stall out. We'll just say that. And so that's the take on gold. Just interesting. This is a bottoming tail. This is a bottoming, and it's not a bottoming tail. It's a change in direction tail is what this is, or candle. It's a doji. It's not really a doji. It's just a change in direction candle. It's called a narrow candle. Okay, so this is a change in direction, and that usually takes place. So you look for change in direction to last, I don't know, anywhere from let's say 3 to 7 days, something like that. So what did we do? We went. Well, this counts. So 1, 2, 3, 4, 5. We don't have much time left if that's going to play out like that. I mean, we would need to see a pop tomorrow into Monday. Other than that, then I would think something else is wrong. But that's my take on gold. Let's go over to oil, look at the USO. And nothing happened today in USO. Kind of stalled out, was stuck in the mud. Nothing going on. I think there's lower prices. In fact, last night I drew in this trend line for you, okay? And it was interesting because today, I'll say that it's not a perfect line just because I'm in a rush. But, this is, you know what? I want to make it better, this line. Here. This line, okay, let's put it up here where it belongs. And then let's put the other side down here where it belongs. That's better. So we came closer than we did yesterday to this trend line, but I'm telling you, this trend line will act as resistance. Okay, and then the next area of resistance, if we get through it, is right above it at 35.42, and then another one, well, I would have to say up here, 35.75 into the 50-period moving average. So there's a lot of resistance in here. Oil's not going anywhere anytime soon unless the USO broke above 35.83, 85. And unless that happened, and in fact, even at that, there's a lot of support here, resistance here, and a lot of resistance here with the 200-period moving. This isn't going nowhere. I mean, on rallies, oil is a short. We'll just leave it at that. And I told you my target time and time again. I think, the target is 85, give or take $1. That's my target in oil, so the price of crude oil, the futures contract. So that's where we stand there. I know I was long-winded tonight, so I'll give it a wrap here, but be careful with the markets because they're in an interesting point. They could break lower, or we can rally for a couple days. Anything could happen. They're volatile. They can whip around. So be careful, and be careful with your long position stocks if you have them. I'm David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Thanks for tuning in, folks.